Olix Network 18, Mission Poshan, Bhavishya Roshan.
A very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks of the day. We'll also keep an eye out on the markets. We'll get you a couple of managements. And most importantly, we'll tell you how to trade the Nifty. Hey, Mangalam, after a bit, we have green on the screen, so things looking quite good. I was looking at the mid-cap index. After a while, we're seeing an outperformance coming in there. Right. But most important, Mark, yesterday as well, we went to the 100 DMA, 10,550. We defended that level a couple of times. And that really told you that we could see a bit of a bounce today. And that's precisely what's happened. A couple of other marks. Pull up the mid-cap index. Just take a look at that. It's doing a relative outperformance. And you always talk about those lines kissing each other. Today, they kissed each other. And now we have more number of stocks that are advancing in comparison to the number of stocks that are declining.
Absolutely, Nigel. You know, you spoke about the 50-day moving average. Where we are right now is just 15 points away from the 20-day moving average, where we found a lot of resistance earlier as well. So we'll keep an eye out on that. And you're talking about those lines kissing each other and moving apart from each other. I was just taking a look at the top FNO gainers. We have Allahabad Bank, which has lost 43% this year. Idea Cellular, which has lost 45% this year. Reliance Communications and JP Associates losing 45 to 60% this year. So we'll keep an eye out on all these stocks which are moving in today's trading session, primarily after declining 40 to 50, at times 60% this year as well. So we'll watch out for that. First up, all the top stories that we're tracking at this point in time.
Right.
All eyes on the RBI Governor Urjit Patel as he announces the Monetary Policy Committee's decision later today. A CNBC TV18 poll shows only 10% of market participants are expecting a rate hike today, with 90% predicting status quo.
And RBI gives a go-ahead for the Capital First and IDFC Bank merger. Rajiv Lal tells CNBC TV18 that the merger process will take 4 to around 5 months to get completed.
Pharma stocks in focus on the back of a US regulatory action. Glenmark is weak as it reacts to five observations issued to the company's Pithampur facility. Aurobindo reacts to details of the 3 observations issued to its Unit 16. Cadila, however, bucks the trend as its Ahmedabad SEZ plant is cleared with 0 observations.
All right, then, in India Bulls Real Estate, that's the stock that we're talking about. Post the buyback of around 27 lakh shares in yesterday's trading session. Tirumolai Chemicals as well. That bounces back after the promoter bought shares from the open market. And finally, CG Power as well is reacting to more than a 300 crore order win. All right, then the Nifty is sitting with a gain of around 45 points odd. A few stocks that are moving around in the last few minutes. We have Bajaj Auto. That's moved higher, so keep an eye out on that one. And HCL Tech as well has seen a bit of a bounce. But is this the real thing? Should you be looking to buy into the Nifty at this point of time? Or is it giving you a perfect shorting opportunity? Ashwini Gujral joins us. Ashwini, your take on the Nifty, 10,640 odd?
See, today, this sort of a pullback rally is just short covering. I don't think we can cross 10,650 to about 700. The market is sideways, and maybe today we can find some triggers so that Bank Nifty can resume its downside. But overall, these sort of, flash in the pan, impressive rallies don't impress me, because finally, people who are stuck at higher levels, they tend to, get off on such rallies. Particularly, mid-cap suddenly rallies 230 points. So, it's basically a lot of short covering. And what you should be watching for is the downtrend to resume and then get on the bus. Because obviously in a downtrend, the swings lower are much bigger in size than the swings higher. Having said that, a few things can be bought since the market is moving up. One of them is Bajaj Finance. That is a buy with a stop of 2100, target of 2250. Reliance continues its upside from last few days. That is a buy with a stop of 945, target of 970. And in my view, Avanti Feeds has possibly bottomed out or is very close to that. Here the 200-day moving average is about 2350. So even if it hasn't bottomed out and has a small pullback at some point, look at the difference between the 200-day moving average and the stock price. So that way, I think this can be bought even by long-term investors. So some of these quality stocks are now coming into the zone where they can be bought. At some point, mid-caps will have a 3 to 5 day type of rally. So that's where buying such stocks would be useful.
All right, Ashwini, thanks a lot for giving your verdict on the index as well as individual stocks. Just keep an eye out on GSFC, making the high point of the day. And usually when we speak about GSFC, pull up GNFC as well. That one holds stake in that. So we'll keep an eye out on individual stocks as we speak. But the key trigger today will be the Reserve Bank, which will release its monetary policy today afternoon. All indications are there that a rate hike is coming. Ahead of the big event, we have Lata Venkatesh with us. Lata, what is your take? If the MPC were to propose a rate hike, would that be bad news?
Yes, there is a lot of confusion as to what to expect. Ritu did a poll of many market participants and only 10% said, yes, there will be a hike. The Citizens Monetary Policy Committee, which deliberated on CNBC TV18, 3:2 voted for a hike. So keep that on the table. There's a lot of confusion in the market. My point is that a rate hike generally is not bad news because it is coming out of growth. Capacities are getting filled up. In RBI's language, it is output gap is closing, which means there is no excess capacity. And therefore, producers will start hiking prices now. Aggregate demand is strong. And therefore, the price hike, therefore, the rate hike. That's good news. Again, so much is priced. In year to date, you've already seen yields rise by about 140 basis points, no matter which yield you take, CPs, CDs, bonds, treasuries, government securities. So therefore, it is in the price. Now, what will market watch for? The voting pattern, which is just running for you. If it is 4 votes for a hike and 2 for a pause, which is quite likely, then the vote goes, but it looks like there are still dovish elements. If it is even 5:1, maybe it will be taken. But if it is 5 votes for a hike and 1 for a 50 basis hike, then, you clearly know that there's something very, very worrying the Reserve Bank. You'll, of course, have to watch for the monetary policy statement. If there is an indication that this is the start of a cycle, again, that'll be a little worrisome. Are they saying financial conditions are affecting growth already? That would be a matter of concern. So really, now it is not a hike that's going to spook the market. It is the talk and it is the nature of the voting that will impact the market. And most importantly, this is not the end of the game. The market will give its verdict only temporarily and wait for the minutes 20 days hence to find out exactly what the monetary policy is thinking. So the reaction will be, whatever it is, tentative. 20 days later, there's more to come.
Okay, all right. Lata, thanks so much for that. Well, we spoke to Chetan Iyer of Morgan Stanley from the sidelines of the Morgan Stanley Investor Summit. Let's hear out what he expects from the RBI later today.
We don't expect the central bank to hike today. Of course, there's always a possibility. But I think looking at the fact that the underlying inflation trend in India is fine, and ultimately that has been the framework that the central bank has provided us. So looking at the trend in inflation, particularly food inflation, which is a big component, it doesn't worry us that the underlying inflation trend is quite okay. On our forecast, we expect the core inflation in India to be going to around 4.3% by March 19. So we think that the trajectory is looking comfortable with the facts that we have. But if you do see a big problem on oil and oil shoots up in a short span of time, then there will be that inflation pressure which the central bank will have to consider. With the facts that we have, we think they should probably hold today, sound a bit more hawkish and say that, look, that easy monetary policy condition that we had so far is done and one should be prepared for interest rate hikes in future. So we see one base case rate hike in last quarter, but we do appreciate the fact that oil prices have moved a bit higher than what we were building in our forecast. And so there is a risk that they could do a rate hike in August.
And you can catch the entire coverage of the monetary policy starting 2 p.m. today, right here on CNBC TV18.
So a couple of Bajaj group stocks, all of them are buzzing. The Bajaj family stocks are at the high point of the day. Bajaj Auto, Bajaj Finance, as well as Bajaj Finserv from the Nifty. Important news developments coming in on your screen. The EDS summoned P. Chidambaram again on June 12th in the Aircel Maxis case. So we'll keep an eye out on that story as it develops. But the stock on our radar right now is Soba Limited. Remember, the company posted a strong set of fourth quarter numbers. To discuss that and the outlook for the next fiscal, we have JC Sharma, the Vice Chairman and MD of the company, joining us on the show. Thanks a lot, Mr. Sharma, for joining in. First up, will FY19 be as good as FY18 in terms of growth? What does demand look like in your core market? So what's the kind of growth you're projecting for FY19?
See, we do believe that the financial performance and the operational performance, whatever we have displayed in the last financial year, that kind of a momentum, when we look at the year as a whole on the ground, that kind of a growth momentum can be achieved in this financial year also. The confidence comes primarily on account of the kind of lineup we have for the new launches. And we believe that those new launches, along with the existing inventory, should be good enough. We also have the real estate as well as the contracts and manufacturing, two sorts of income stream. So on the contracts and manufacturing side also, you will notice that this year also we should be doing a much improved performance, and accordingly I believe that in this coming financial, in this financial year 18-19, we should be able to maintain the growth momentum what you are talking about.
Well, Mr. Sharma, our realizations, however, they have been declining. Is it because of higher sales from the low ticket projects, or is it because you're offering higher discounts?
No, we are not giving any higher discounts. If you really look at the prices have started stabilizing. This is primarily on account of the more units being sold now, where the other partners also have some stake. So we follow these new accounting norms, where the revenue we don't put it in our sales numbers, the square footage we put in our sales numbers. So despite selling higher priced products, the per square foot realization looks low. But net, the overall realization gross, they remain quite okay, and they have already stabilized since last 2-3 quarters.
The new development plan for Mumbai has been released with the increased FSI as well. So in regard of that, are you looking to get into new projects, increase your project development plans?
We definitely are in the Maharashtra market. 2 projects should be launched in this financial year in Pune. As far as Mumbai is concerned, we are definitely scouting for a good opportunity. We believe that we do not have that required competency as far as the design side, where how much FSI we can get and how do we get the required approvals. Those kind of challenges we have. If we can overcome that, definitely in the Mumbai market we would like to get into. We are also looking at a couple of more cities in Maharashtra, and definitely will be there next quarter in Gujarat, Gift City.
Well, Mr. Sharma, I think the street likes the fact that at least you're not giving any discounts, and that explains why, in fact, I think the stock has moved virtually to the high point of the day. But just want to touch upon the commercial business. Now, that's not really part of your business as of now. But with so many PE deals taking place in the commercial leasing business, would they also want, any kind of a strategic investor for any of your projects?
No, as you very correctly put it across, we do not have any meaningful asset today to put it before a PE investor. We would definitely like to build this portfolio, and as we see that our realizations improve, cash flows improve, debt equity remains comfortable, definitely this is one vertical where we are putting more focus, though the results will take 3 to 5 years to get reflected.
All right, now that we have you with us and the viewers are watching, Mr. Sharma, you told us last year that due to the buyback, the debt will remain at the same level. You won't see any reduction. However, you've been able to reduce it by about 128 crores. So what's the debt outlook for FY19, the cost of borrowing? Where do you expect your debt to be at by the end of this fiscal?
See, cost of borrowing is expected to remain much below 10%. We are currently at about 9.3 or so, if I remember it correctly. And we believe that because the banks have started increasing the MCLR rates and other things, the debt may not go up, but it may remain at this level. As far as the debt equity level is concerned, we believe that 0.8, that kind of a debt equity what we have set out for ourselves, we should be around that only, and with that also we can change growth, and will have required sufficient funds to invest in new opportunities as well.
Okay, thanks so much, Mr. Sharma, for stopping by and giving us all those details. All the best for the remainder of this fiscal. Well, on that note then, the Nifty is holding well in the green, so let's slip into a short break. You come back. We'll continue our focus on the markets. We'll also focus on various stocks. Stay with us. A quick update on what's going on in the pharma space. There's news coming in on Glenmark, Aurobindo, as well as Cadila. Ekta's with us. She's going to tell us what's going on there. Ekta.
Well, I'll start with Glenmark Pharma, where it is reacting to the Pithampur facility getting 5 observations from the US FDA. It was inspected in the month of May, and the street is maybe a little bit apprehensive that it could take some time in terms of the remediation, though the nature of the observations, according to analysts, don't seem as serious. Now, for Aurobindo, the Unit 16 got inspected. It is a new facility, so not much in terms of filings for Aurobindo from that plant. Received 3 observations, routine in nature as per analysts. And separately, Cadila is in focus on account of the fact that they have their Ahmedabad SEZ plant, which has been inspected successfully by the US FDA. So 0 observations for that particular facility, hence positive news coming in.
All right, Ekta, thanks a lot for that. We will keep an eye out on that. Just watch out for the markets. In fact, the Nifty Bank is all but moved into the red, down about 3. It's down from the high point of the day, up just by about 3 points. ICICI Bank is the one that should come up for you, and that one's trading at the low point of the day as well.